Let me make sure we're live.
Hello, hello, hello. How's everyone doing on this great Monday?
Hello.
It is 6 p.m. It is Monday, check, check. And we are live here on the Green Table Talk Show, check. So now all we need is you, viewers, to come on in. Come on in, come on in. Hello, hello, hello. Yes, I see you. Wonderful, wonderful. We are excited. I hope everyone had a great Thanksgiving. We are a little lag. We did too much, but we are here nevertheless. We are thankful and grateful. So,
Yes.
we have a great show lined up. We have a special guest with us on tonight, and we are excited to bring on Mr. Perry so we can talk about the primary residential reverse mortgage.
Yes.
So it's going to be good. It's going to be great. So what I need you to do first, viewer, before we go any further, I need you to share this on your platform. I need you to tag individuals who need to be in the room, hear this conversation, because listen, this is information that you will need. You may not need it right now, but you need to have this in your back pocket.
Yeah.
And so we're bringing it here live to you today. So we're going to just jump right in. I'm Jessica Wright.
And I'm Ishonda Blue.
And we are your co-hosts and your senior care experts. And we are glad to have you here on this Monday evening on the Green Table Live Talk Show. And so we always have new viewers, and I always like to tell our viewers what the Green Table Live Talk Show is all about. And so Ishonda and I, we're registered nurses. We are past caregivers. We took care of our grandmothers, and we are senior care experts, so senior care providers. And so we have been on both sides. And so we like to share our knowledge, our resources, our expertise on how you, as caregivers, maybe you're not caregivers yet, maybe you will be, maybe you currently are, maybe you have been, or maybe you will need caregiving. So this will hit every household. And so we want to just bring resources. We want to bring information. We want to equip you so when it is time that you know what to do, where to go, and how to handle it. And so that is what the Green Table Live Talk Show is all about. Okay? All right. So now, Ishonda, tell our viewers a little bit about who we are.
I think you've already done
just
that.
A little bit. I just told them we were a nurse. That's it.
Well, we are senior care experts, and you told them all the things. But anyway, our main thing is adult daycare. That is our main thing that we do. We've been doing senior care, owning and operating senior care businesses since 2007. Mm-hmm. But like I said, today our main thing is adult daycare. And our mission and our goal is to be able to keep seniors at home and in their communities as long as possible. We started with our grandmother, who was our first client, who told us she never wanted to go to a nursing home. And so that is how we started. That is how we formed our mission and our vision and everything after that. So, but I do have a win I want to talk about right quick, because we did get our trademark.
Yes.
Approved, and we got to start using the right language, because I think we've been saying it for so long now. We don't cut out some words. And anyway, it is the Green Table Senior Care Talk Show.
All right.
Yes, it's the
Green Table. We gotta say
Senior
it
Care
right.
Talk Show, and so we gotta put our symbol on that.
Yes.
Put our trademark symbol on that, and it is trademark. We're so glad about that. It took a while to get it. Mm-hmm. But we finally got it, and that's a win on tonight.
Oh, yeah. So we're official.
Official.
All right. Well, again, viewers, thank you all for joining joining in with us, and we're going to go ahead and we're going to bring up our special guest, Mr. Perry. He is here and he is ready to talk about all things reverse mortgage. He's going to give us the 411 on all the do's, the don'ts, and what we need to know about reverse mortgage. So without further ado, I'm going to bring Mr. Perry right on up to the stage. Welcome him.
Hello. Hi, my name's Stuart Perry. I'm with Primary Residential Mortgage, the reverse mortgage division. And what a reverse mortgage is basically it's a nickname for something called a home equity conversion mortgage. And it's a way for seniors, homeowners, to convert the equity in their home into liquid resources that they can use pretty much in any way they want. It's pretty limited application. It's certainly not for everyone, but for the right people, it can be a life changer.
So tell us, who would be the right person? Who would this be for?
There's some pretty strict requirements in order to be able to even apply. One is you have to be at least 62 years old.
62. Okay.
62. Now there are a small number of private proprietary products that can go down to age 55, but none of those are insured by HUD, which the regular HECM mortgage is. But you have to be 62, or the youngest borrower if it's a married couple.
Okay.
At least 62. Have to own a primary residence. Can only be used with a primary residence, so you can't implement this with, say, an investment property or a second home or something like that. And you have a few requirements that you would have with your regular mortgage, which is you have to continue to pay your property taxes. They won't let you out of that. And you get your home insurance, which is a requirement of any mortgage product.
Okay.
So let me get that correct. So basically the requirements is you must own your home. It must be the primary residence, and you must be at least 62 years young.
That's correct. And the way that it works is it is a mortgage, just like a mortgage that you use to purchase a home is. It just kind of works in the reverse way. And what it does is it allows you to tap into the equity that you've grown over the years by owning your home and access a percentage of that, usually around 50%, that you can take out in a number of ways with no required monthly repayment. And you can take it as a lump sum, which is one way you can do it. You can take it as monthly payments for a set period of time. Say you want a monthly payment for 15 or 20 years. You can do a monthly payment for life, or you can convert that equity into a line of credit that you can access for any purpose that you want to use, whether that's to pay down debts, because one of the things that this is going to do, if you have an existing mortgage, it's going to pay that off. So you will not have a monthly mortgage payment, but you can.
So let me make sure I understand. So if let's say that you have a home that was it appraised at 100,000, and it is paid in full. You're 62 years old, and you need some cash. And we'll talk about different ways, different scenarios for people who may need to use this. But long story short, they need some cash, and they can do a reverse mortgage for, if the house, let's just say, appraised at 100,000, they could get 50,000 in cash. Is that correct?
That's correct. They could get 50,000 in cash. They could get 50,000. They use an amortization process, but they could get that paid out in monthly installments for a period of time or for their lifetime, or they could put that in an equity line. And the equity line is by far the most popular choice that people take, because it grows at the rate of interest. So that equity line is going to grow. Most cases, the cash, whether it's taken as cash or monthly payments. In the end, those proceeds more often than not end up are being used for home care or extended care or maybe even institutional care. So it can be in a way to fund a long-term care solution.
Wow. So those are the common uses is long-term care, whether it's home care, adult daycare, assisted living.
Right.
That's what you kind of use for. And it is, so I guess it's the question too, do they still own the home?
Yes. Yeah. The homeowner is always on the title of the home. They always own the home. One of the drawbacks, or there have been some misconceptions about the reverse mortgage, and one of them is that the bank owns the home. Well, no, the bank doesn't own the home. The homeowner owns the home. They're on the title, and just as with a regular mortgage and a regular property, when it comes, and it will come for everyone, that you can no longer be in the home or you pass away, then just like with a regular home, your heirs have first rights on the property. They can sell it, and they have access to whatever equity is remaining. If they want to, they can pay off whatever the balance is on the reverse mortgage and own the house, live in the house, do whatever they want with it. So you do maintain the title of the home.
Okay, so let me be clear. I'm going to keep with that $100,000 scenario. So our parents own their home. It's worth $100,000. They do a reverse mortgage to get $50K out to do whatever they want to do with it, actually. But most people use it for long-term care. Correct? They can use it for whatever.
Right. They can use it for anything. They can build an addition if they want. They can take a trip around the world. Probably not a real good financial option, but it can be done.
So, okay, so 50,000, their house is paid for, so it's not a case of landlord or something, a mortgage or anything. So what happens when, if something happens to them? I think you touched on it, but I want you to explain that. What happens when something happens to them? What happens to that property?
Okay. Well, yeah. In our example that we're talking about, and 100,000 and using 50,000, good round numbers, easy to follow. So they're taking out the 50,000. Well, they didn't owe anything on that home, so that other 50,000 in equity is still there. And every year is, homeowner, except for there have been some periods of time where it wasn't true, but in most cases, every year your home appreciates in value. So that equity grows. So they've taken out the 50, however they took it. If they took it cash, they took it monthly payments, or they took it in an equity line. The value of the home continues to increase. That's just appreciation, just property appreciation. So as time goes by, they're actually of that other 50,000 that was still there, that's actually going to grow. So if the parents or the owners pass away, the heir gets the house. They have up to a year to liquidate it one way or the other. And the primary way, in most cases, it's just like even when there's not a reverse mortgage. In most cases, the kids sell the house, right? That's what happens. So in this case, if they do, they pay off the $50,000 reverse mortgage, and whatever equity is left, that other 50 plus what it's grown to is theirs. That's their inheritance. So you don't forfeit your legacy when you enter into a reverse mortgage.
So what if they don't want to sell? If they want to keep the property?
They have to pay off the underlying reverse mortgage. Then it's free and clear. Then they have a free, clear title to the land. I'm sure there's attorney stuff could be involved, which says, okay, well, they have to have been the heir on paper, so they have to have been in the will, and unless, I guess, absent that, you would go through the whole probate process, which is just like any other real estate survivorship transaction.
This is great information. This is
Mhm.
very eye opening. I want to know, um, how do we get involved? How do we start the ball rolling? If someone is on and they're interested, this is something that they've been looking for. I just want to cut to the chase. How do we get started?
Well, it's in the work in the entire realm of mortgages and mortgage financing. Reverse mortgages are still, even though they've been around since the late 80s, are still a relatively small percentage. They're growing more and more popular. I'm interacting with CPAs and financial advisors, and people are starting to look at it as in terms of, here's a source of potential equity for seniors that has remained untapped. So I think the way that, I mean, I got involved because my wife and I personally got a reverse mortgage when we built a house, and it opened my eyes. I said, "Oh my gosh, why didn't anybody?" And I had known about them. I'm thinking, why didn't I do this before? So I think to me, since there's not a lot of people like me who do this, um, the way to get involved is to be able to say, "Hey, I know somebody who does that." When you have people who
Yeah.
get up against, and everybody's going to get bumped up against the reality that as you age and the longer you live, the more likely it is that you're going to require some sort of senior care.
Mhm.
Mhm. I have a
It
question.
does, unfortunately, it literally bankrupts people.
Right.
And this can be a way where, maybe that can be avoided.
I don't know if this is I'm just thinking out loud because we meet you know, I don't know how to say it. So as more and more baby boomers come into the baby boom, a lot of them have assets, right? They have homes, they have retirements, they have they have cash. Um and so they wouldn't qualify for like a Medicaid program, right? For low
Right.
income. But I know there are cases where they could do like some type of spin down. So would this apply? Like, could they?
Well,
Um,
it can. I mean, those the spin down rules are always going to be the same. But what this in those situations, what this can do is help people not have to access, let's say, the 401k that they had when they retired from their job, or other cash that they had, or other assets, so they can access this pool of asset and preserve those other assets. So um, but the Medicaid issue is going to be, it's going to be the same whether you have a reverse mortgage or not, and that is, if there are assets there that, well, actually, this can actually preserve those assets, because like I was, when we were talking about the line of credit, if you get to the point where you need to uh, go into an inpatient facility for long-term care, well, you take all that cash, and that's your entry into the facility, and when that's gone, then you qualify, because there's no spend down left. It's already gone.
Yeah. It seems like for seniors, and it's a win-win for them, right? So because a lot of them, again, they struggle to pay for um, senior care, the long-term care. And so we see so many people that are in that middle bracket that
mhm.
don't qualify for Medicaid, that don't make enough for private pay, but they could actually do this reverse mortgage
Yeah.
and still keep their home, still have all the things, and still pay for the care, or that can be their living. Either
Mm.
way, I just see it
Right.
as a
It's
win-win for those
I just
individuals.
thought of another example because a lot of times we, especially here in South Georgia, we see people who own farms. They own a lot of land. And most people don't plan for senior care. So something happens to mom and dad, they got all this land, it may still be a home house. And we've actually seen where the children try to take care of mom and dad so that they can keep and preserve the assets that they have. But this could be an option for those who.
Well, yeah, and one of the things that um, is key is that the money that they take, however they take it, is proceeds of a mortgage, so it's not taxable. So you're out of that dilemma of, especially in the case of a farm, because these people are, the land is appreciated so much that they sell the farm, the tax bill is going to wipe out the kid's inheritance.
Yeah.
So, Mr. Perry, they say when something sounds good, real good, something is in the milk, not clean. What is the pitfall? What is it that we need to be aware of?
Here's the pitfall. I mean, this is not a product or program for the desperate, because it requires that there be some planning ahead, and it be a good fit, because the way that you can get in trouble with one of these things is if a person or family is stretched so thin that they can't keep up with the property taxes. And we see those property taxes, I mean, it's like every year up. In homeowners insurance, if you can't keep up with those, then those are the only two ways, other than you've let the property turn into something that's uninhabitable. Those are the only circumstances under which you can be foreclosed on with a reverse. And you can be foreclosed on with a regular mortgage if you don't pay your taxes as well. So,
Right.
But I mean, I spent a number of years in finance and banking, and there's always been, and it feels good to say, oh, the bank just wants to take your house. Well, no, the bank does not want your house. And that's the last thing they want. So reverse mortgage lenders, they go way out of their way to try to keep people in the mortgage, because the foreclosure doesn't help the bank, whether it's a regular mortgage or a reverse mortgage. So,
Wow. Stuart, can you tell our audience how they can reach you if they're interested in learning more about reverse mortgages?
Sure. Yeah, my business email is sperry, SPERRY, at PrimeRes, so that's, which stands for Primary Residential, PRIMERES.com.
Okay.
And I prefer working just with my direct phone line instead of routing it through an office, which is 404-683-0722.
Okay. And we'll make sure that get in the chat as well. So if you guys want to reach Stuart, Mr. Perry, you can always contact us and we'll connect you, and we'll make sure that his phone number and email gets in the chat as well.
Doing it as we speak.
Yes, she's putting it on there now. Anything else you want to that we didn't cover that you would like to add to the conversation?
Well, yeah, no, I mean, well, yes, there is, and that is, I mean, you hosted a great event a month or so ago. It was a quarterly senior care providers networking event, and so I would just want to, encourage anybody who's, no matter how you're connected to senior care, whether it's just, just on the edges, just tangentially or whatever, to make sure that you get with Innovative Senior Solutions and get involved in that quarterly networking, because it's pretty cool.
Thank you. That's how we met you.
See, it works.
It does. And we had not heard of reverse mortgages, and we was like, wow, we got to get this information out. So, yep.
Thank you.
All right. Thank you.
People are in the chat saying this is great information. Listen, viewers, again, if you know someone, if you can tag them in the chat, if you can share this on your page, this is great information. I mean, I just felt like a light bulb went off, because I can just see so many people that I can think of that I can mention this to, that would be a solution for them to be able to stay at home, stay in the community, and not be overwhelmed, their family being overwhelmed, burdened about what to do, financially. So I just see this as a light bulb. I think that someone has a question in the chat.
Okay.
Francine.
I know you can't read it. I'm going to read it for you, Stuart, okay?
Okay, 1 second. Somebody's at my door. I'll be right back in 15 seconds.
Okay. I might can answer it, and then when he come back, Francine, we'll see what he says. So the question is, if someone who has a reverse mortgage passes away, does the family have options? And he said yes. So you have two options. One option. You can pay off the reverse mortgage, whatever is left that's owed on it. You can pay it off, and it's two options. You can pay it off, and then it comes to you, or you can sell it. Sell the property, and of course it's cleared up that way as well. So those are the two options if the family member passes away.
Sorry for that interruption.
I think we got it. The question was, what happens if a family member passes away who has a reverse mortgage? What were their options? And I told them what you told us. They could pay it off themselves. Correct. Or they can sell it, and it'll get cleared up that way.
Correct. So if it's an inherited family member, say a son or a daughter that inherits the house, they can sell it, and the remaining equity belongs to them.
Okay. And if they didn't want to sell it, they could pay it off, and it still comes to them.
It still comes to them. Well, and they still own the house.
Right. Yeah. Okay. I think that answers the question.
Awesome. Mr. Perry, give me your phone number one more time.
Okay. Yes, that's 404-683-0722.
Okay, we got it. We're going to put it in the chat. And we are definitely going to invite you to the our senior festival next year.
Yes, absolutely.
Yep, you'll be there. So definitely want to make sure people learn more about this for sure.
Okay, great.
Awesome. All right. Well, thank you for joining us.
Thanks for having me. I appreciate it. All right. Well, listen, viewers, that was awesome. You always learn new things. And so you have to be open. And so you just never know what we're going to do here on the green table. And so that was very informative, knowing resources. Yeah. The resources. Sometimes we just don't know. When you don't know, you don't know. And so that's what we want to do here. We want to bring resources. We want to bring information. We want to bring tools so you can navigate the senior care maze, because listen, a lot of things can come up, and we've seen a lot of families do a lot of things to try to keep their loved one at home. Some sacrifices they were doing just to make sure mom, dad was taken care of. And so here is one way. Yeah. Okay. All right. Well, that's a wrap. So thank you again for joining us, and we will be right here next Monday at 6 p.m. And listen, we hope to see you here. So thank you all. Have a great night. And again, don't forget to share. All right. Good night. Bye.